Get a kick out of this. Interest rates are up, inventory is up, and sales prices are up. In the past, that's kind of unheard of, but that is the market that we're dealing with today. And let me explain to you why that's happening. So inventory, insurance, interest rates, it's all up, and so are sales prices. You would think with all of this housing affordability being kind of harder to attain, we would see a decrease in the market, but that's just not happening. There's a few reasons for it too. Number one, the sheer population of people. I've said this time and time again. There are so many buyers out there because the millennials are entering their prime home buying years. That being said, they do outpace the older generations, and they're shopping with the same inventory that their parents and grandparents were shopping with. So think your 60s, 70s, 80s builds. That's the same inventory that was available back in the day. It's still like the only inventory that's available today. We just haven't built enough inventory to compensate for the demand. So even though the housing is less affordable, the buyers are still buying it. Those that can afford to buy it are still going to buy it. That being said, the two major reasons we're seeing a huge increase in inventory right now in Santa Cruz County is in part of the interest rates. They were poised to go down. They were predicted to go down by now this year, but unfortunately the Fed has not reduced the federal funds rate. Interest rates currently are hovering around mid 7%, and that closely mirrors what they were back in October of 2023. But unlike that time period, we're not seeing a decrease in sales activity. Now, because the interest rates haven't gone down, they also haven't been as volatile as they were last year. So I think more and more people are now finally just getting comfortable with the interest rates where they are. A lot of sellers were previously just waiting to see if the rates go back towards 5% before they choose to move out and move on with their lives. I think a lot of people have just realized at this point we can't bank on the Fed now to reduce them. So if you can afford to move, if you can afford to move up to a newer home, those people, they're starting to do it. They don't want to wait anymore. That being said, there's a whole other degree of sellers out there that are starting to get ready to sell, and it's the number one conversation I'm having with elderly sellers out here, and has a lot to do with insurance. Insurance is such a hot button topic here in the Santa Cruz Mountains because it's so expensive. On average, a 3-bed, 2-bath home with maybe about a 6,000 square foot lot, you're looking at least $4,500 a year for an insurance premium. That includes fire insurance. But unfortunately, a lot of our sellers out in the Santa Cruz Mountains are of age, and they're looking to either retire, they're already retired, they're on a fixed income, and they cannot swing these huge insurance increases. So unfortunately, they just have to sell. That really seems to be the number one reason for elderly sellers moving out this past year. It's most of the conversations that I'm having. So of course, if you're in that same boat, talk to me. I'm here to help you. But that being said, even with the high housing costs, we're still seeing a huge buying demand. Unfortunately, the more expensive housing is not offsetting enough people to really slow the market down. So we're still seeing multiple offers, still seeing homes accept offers above asking, especially when they're those beautiful move-in ready homes. Now here's something that's pretty important to consider when we're looking at this data too, is we are within a presidential cycle, right? And the reality is every time there's an election, there is some volatility around the housing market. And I took a peek at the employment report for the last quarter. It looks like we're sitting about 3.9% for the unemployment rate. And that actually has a big impact on what the Fed decides to do with the economy and monetary policy, because try to hedge their bets, right? And so this 3.9% interest rate is actually the highest level that it's been since January of 2022. Kind of gives way to future inflationary policies. So as we get closer to October, see if there's a difference in the interest rates at that time. But I'm not gonna get my hopes up at the end of the day, honestly. And let's see where the market takes us as we move into the summer. If the interest rates really do remain where they are for the rest of the year, how it impacts people as we approach that fire season, what's gonna go on there. Thank you so much as usual for watching. Bug me if you have any questions or want to chat about these details further, and I will see you next month. Thanks so much for watching.